Hey, good morning, everyone. Jack McGrath with NakedTrader.com. Well, we're right in front of the open here of the open outcry. It's Friday. We got the last day of April. I don't expect it to be a very volatile day. The market's sitting right here at basically the top of the move. Red June yesterday, 16.5 high. I have that 15 to 17 range as resistance. We start to get above 17, I'd say 20, which was an old low before, and then 24.5 on the upside. I want to sell these bounces. I think it's time for the market to, what you'd be looking for is a tight little range today, or some kind of indication that the market's getting tired up here. I still like the short June 88.93 strangle. It settled at 5 1/4 yesterday. I'd like to add to a position there going forward. 5-6 market roughly, so around 5.5. I'd say I'd like to buy that strangle going forward. SEPD spread traded down a bit yesterday. I have 9.5 to 8.5 as support. Still like buying that spread going forward. I think that we're going to get a correction. We could sit up here for a while. The market could just sit up here on the highs and chop around, but I do think eventually we're going to get a nice down trade and we can capitalize on that move. We had a few big option trades yesterday. The March 93.95 call spread traded 100,000 times at 08. Paper sold that. Open interest indicated up 114, almost 115,000 in the March 93 calls, and up 107,000 in the 95s. The only thing I can think of why somebody would be selling an in-the-money call spread like that is because they're long futures and they're just extending the trade, taking in some premium. Otherwise, I'm not really sure why you'd short that call spread. The D's put fly, I talked about it yesterday, the 90, 92, 95 traded well over 100,000 yesterday. The D's 95 puts were up about 112,000. You also had good increases in the 90 and 92s. So I like, a D's put spread. Maybe you want to extend out further out the curve a little bit, maybe concentrate in the reds somewhere. These mid-curve options, I think, will give you an opportunity with a little time. I think short June will be enough time to capitalize on a down move. So 10-year, I've sent out the 50% retracement on the weekly. That comes in around 121.07. That even to 3.5 areas, the 200-day moving average. You got the 79% retracement on the daily. I think all these levels are telling you that you got to be cautious about being long the market. I'm still looking for the correction. That's where we're at right now. Yes, we can sit up here, chop around, but I still like putting on some bearish type trades. Have a good day. Jack McGrath with NakedTrader.com. Thank you.